Hi, and welcome to Westpac's end of day wrap from London for Tuesday, September the 6th. Another serious down day too on equity markets. The European story continues to deteriorate. Today we've got a strike in Italy over austerity measures while the government tries to revise its austerity package. We've got the Finns in consultation with other European members or Euro members discussing their demand for collateral related to their contribution to the Greek bailout. The Greek government itself is suggesting or indicating pretty clearly, in fact, that it's not going to meet its budget deficit cutting targets that it's required to meet to get the ongoing tranches of bailout funds that they require to keep themselves funded. Just a couple of months ago, they were looking at the economy shrinking maybe 3.5% this year. Now we're talking about maybe a 5% contraction in the Greek economy. The cost of insuring Greek debt has risen to record levels. Bond yields in Italy and Spain are rising again. We've got the banks being hammered in Europe. The share prices are falling particularly sharply. Wherever you look, there's more bad news on Europe creeping through. It's just like we said, August was a holiday for most of the European market. Now that they're back, they're really focusing on these issues. The next one to come up will be the German Constitutional Court, which is expected to rule tomorrow that although the Greek bailout or the German contribution to it was legal, in future bailouts we'll need to see need to have more parliamentary oversight. And given that Angela Merkel has lost election after election based on campaigning in favour of the bailouts of the problematic European governments, that's going to add to market uncertainty about just how long these bailouts are going to continue. So, I mean, the European story is unravelling. It looks like a train wreck in slow motion. It's being reflected in equity markets today. I'll just run through the numbers as they stand at the moment. We've got, I mean, it's just after 4 o'clock in London, so still some trading to go here. US markets are open too, of course. The French market's down 1.6%, the German market's down 1.8%, Spanish market down 2.2% at the moment. The FTSE is actually unchanged on the day, somewhat separate from these European problems, not entirely immune to the issues, of course, but exchange rate flexibility, monetary policy flexibility, it seems to have been recognised by the market as a reason not to hammer the UK stock market as much. The one standout performer in Europe today has been the Swiss market, up 3.6%, because the Swiss National Bank has said enough is enough, and they're going to sell whatever they have to in terms of Swiss francs to ensure that it doesn't strengthen beyond 1.2 francs to the euro. That quickly saw the franc move from 1.1 to 1.2, like a 10 or 11% centime move, and it's hovering around 1.2 at the moment. So that's one source of safe haven, or one potential safe haven asset class that's kind of been removed. You can't just buy a Swissy if you're worried about problems in the rest of the world, because the central bank will be there selling it, and so you're not going to see the appreciation that you might have previously expected. So that's going to put more pressure perhaps on gold price, and gold's at a new record high today, and even other potential safe havens. Some are even saying the Aussie dollar could become a bit more of a safe haven, although we're not really seeing that at the moment. And I'll run through some of the data that came out today. We had European GDP numbers for the second quarter. No revision there, still up 0.2% in the quarter, but the detail included the first contraction in household consumption since the recession of 2009. Much slower business investment and a contraction also in government spending. So, but that contraction in consumption in particular is of concern. Not a particular surprise, because we'd already seen it in the German numbers a few days ago, but it just confirms the weakness that's starting to really emerge in the European economy, the broader European economy. On the other number was German factory orders, a big fall there in July, down 2.8%. That's the factory sector has actually held up pretty well in Germany. Industrial production has been not quite as strong as orders, suggesting there might be some momentum still in that sector. But with orders now falling away, if we see another fall in the August numbers, would be a pretty strong signal that that industrial momentum is falling away too. As I say, more bad news out of Europe. And in terms of the US data, we had the services and construction ISM, or the non-factory ISM. It's surprised by blipping higher. It rose from 52.7 to 53.3 in August. That's still not a particularly strong result, but nevertheless it does show that the non-factory part of the US economy did seem to withstand the turmoils of August, better than perhaps we expected. The factory equivalent, the factory ISM, which was out last week, you might recall, did hold above 50, but only just. So the factory sector is almost stalled, according to these surveys, but the service and construction sector combined doing just a little bit better. Nevertheless, it hasn't stopped the US market from falling away. The Dow's down 2.4% at the moment, ebbing and flowing, but certainly around 2%. Remember, there's still quite a few hours of trading to go. And within that, banking sector stocks also hurt pretty hard. There's a court case going on about mortgage lending against some of the banks, and that's seen bank share prices fall away. In terms of events to look forward to in Australian trading, speaking of which, the Aussie dollar, before I go on to that, Aussie dollar's at 105 at the moment. It did rise to 106, temporary blip higher in the Aussie around the time of that SNB announcement that they were going to defend or prevent further appreciation of the Swissy. But the Aussie's been drifting lower since then as equity markets have fallen away. So 105 at the moment. Events to look forward to in Australia today are we've got the second quarter GDP numbers coming out. We've nudged up our forecast to a 1.3% in the quarter, following some partial data that we saw earlier this week. But basically that 1.3% represents a bounce back from the flooding affected first quarter, where we saw exports in particular hit pretty hard by the devastating weather in the early part of the first quarter. The underlying story in the Australian economy is still pretty soft, and we'll get an update on that potentially from Governor Stevens. He's in Perth and he's going to be delivering an address over there Wednesday morning. The only other thing I haven't mentioned is a bit more detail on the commodity markets, just mixing it up a bit in terms of the orders today. As I said, gold's back up a new record high, $1,902 an ounce, up 1.3% today. But pretty much every other commodity is down. We've got copper down 1.8% and crude oil down 2.2%, $84.53 a barrel. Okay, I'll leave it there. So tomorrow we'll be reporting on what the German court decided, more economic data coming up, and I'll see you in 24 hours. Bye-bye.